Hello, everyone. My name is Joonas Joost, and I'm Financial Director of Tallink Grupp, and I'd like to give you a short overview of the company. Tallink Grupp is an established company founded more than 30 years ago. It is a leading provider in Europe of leisure and business travel on the sea and in the Northern Baltic Sea region. The company operates a fleet of 15 vessels, which we own, and we're offering our services on 7 ferry routes in the Northern Baltic Sea region. In addition, we operate also 4 hotels, and in the last couple of years, our business has been severely affected by the COVID pandemic. So when trying to understand the size of the company in figures, then perhaps it's best to look both the numbers of pre-pandemic years, so in 2019, and also the latest annual data of 2020. So in normal years, we were offering services to nearly 10 million passengers annually, which in 2020 dropped to 3.7 million passengers. We carry with the same ferries also roll-on, roll-off cargo units, and this business was not affected that much by the pandemic, and it has been a stable part of the business. So around 380,000, 360,000 units annually. Our revenues pre-pandemic were nearly €1 billion, but during the pandemic, it has affected us quite significantly, and the volumes have been down by roughly half, so €443 million in 2020. We used to have 7,200 and more employees. The numbers have been greatly reduced, and at the end of 2020, it was 4,200. In the balance sheet side, the assets total €1.5 billion, mostly the vessels, and also the number of loyalty club members, 2.8 million, has remained fairly stable in the recent years. We operate under 2 brands, Tallink and Silja Line, and the company is listed both on Nasdaq Tallinn and also in Nasdaq Helsinki. And in general, we look to be the pioneer in Europe in terms of offering excellence in leisure and business travel and sea transportation services. And the focus in terms of competitive advantages is on having the most modern fleet, strong brand and market awareness, to have a comprehensive and wide route network, and obviously high level of safety and environmental standards. In the last few years, the focus has really been on managing the costs and the cash flows to ensure that the company will come through the global crisis. This is perhaps a bit information-dense slide, but let's take it piece by piece and focus firstly on the map. So we are operating in the northern part of the Baltic Sea on the ferry routes connecting Estonia, Finland, Sweden, Estonia, Sweden, and Latvia, Sweden. Most of our passengers are Finnish, with Estonians being the second largest group in the passenger mix, and Swedish the third largest. We also have passengers coming to our region from outside our home markets, particularly in 2019 and earlier years. So we have also quite a number of passengers from Europe, but also Asia and other countries. Competition-wise, the market has a few established players. So Tallinn-Helsinki, which is the shortest route, is the most competitive. And in addition to our operations, we also have Viking Line and Eckerö Line offering the services on that route. On Helsinki, Stockholm and Turku-Stockholm routes, the competition is from Viking Line, who is also operating on both of these routes. So on Tallinn-Helsinki and both Helsinki-Stockholm, Turku-Stockholm routes, we have the largest market share. It's effectively close to 60% on both of the routes. And Viking Line we view as our main competitor, as they command 40% estimated market share on the Finland-Sweden routes, and nearly a 20% market share between Estonia and Finland. And when we're talking about Tallinn-Stockholm and Riga-Stockholm route, then we have been the only daily passenger service provider on those routes. And why on the map some of the routes are with dashed lines? So this represents the routes which were undergoing temporary suspensions during the pandemic year and which have been affected by the pandemic. When we are focusing on the bottom half of the slide, then this is just to give a brief understanding of how we view the market barriers and then general competitive picture at large. So when we're thinking about new entrants to the market, in addition to the existing competition, then we see that it would require quite significant investment, mainly to have a nice class vessel, which would be suitable also for the passenger standards. And the vessels need to be fairly high in capacity in order to provide efficient operations. And to our understanding, there is rather limited secondary market for such vessels either to buy or also charter. So basically, this determines that that market is fairly stable and it's occupied by incumbent players. When we think about air travel as competition to our services, then particularly talking about the short Tallinn-Helsinki route, then we are talking about higher prices and actually longer duration for the air service. So the connection between Tallinn and Helsinki, given the total travel time, is fastest by a ferry. Also, when we're thinking about capacity constraints, then the planes usually take up to 100, maybe in some cases a bit more passengers, while our vessels can take 2,000 passengers in one go. And also, there is no option for air travel for the passengers who would like to travel with their car. But since all our ferries have car deck, it is an option to travel with the ferry for the passengers with car. And lastly, when we can think about other means of transportation to and from Finland, which is due to the Baltic Sea and due to neighboring to Russia, effectively like an island, then the road travel is it would simply take too long time and it would be much more inconvenient. And also there are no railway routes between Finland and Estonia, and also connecting Helsinki and Stockholm. And when we're talking briefly about our business model, then we can think about it mainly in two distinctive services. One is the shuttle service, which is the fast connection between Tallinn and Helsinki. It takes only 2 hours with our ferries, and the other routes, the longer routes, are overnight routes. Take more time and are more oriented to leisure passengers rather than quick transportation from point A to point B. On board all of our vessels, we have extensive shopping opportunities and also catering services. So this is the reason why actually half of our revenue is made up by sales in restaurants and shops on board our ships and on land. The same vessels also carry ro-ro cargo, which means that also the cargo business is fairly sizable portion of our operations. And in 2020, the share of cargo revenue was 21% in the entire mix. We have also some other smaller operations, as mentioned earlier, hotel services and travel packages, and one vessel is chartered out on long-term charter deal. Altogether, other services made up 5% of revenues in 2020. So our core business is the shipping operation in the Northern Baltic Sea region, which makes up overall in 95% of the revenues. And just to give an understanding in terms of size of the company in perhaps global competitive scape. So we are about third in the world with nearly 600,000 gross tonnage fleet. But since our business model is quite heavily geared toward overnight service, then we dominate the ferry fleet in terms of number of beds, with our fleet having nearly 25,000 beds. And revenue-wise, we are third behind DFDS Group and Stena Line, at least in 2019. And the extensive offering in our ships actually makes us comparable with the world's largest airports in terms of travel retail offering. And when we think about all the top travel retail players in the world, then we are borderline top 20 companies globally. Just in visualization of various brands available in our shops as quite usually in all the airports and harbors globally. And in addition to the shop sales, we also offer quite wide range of dining on board our ships, and we're catering for all kinds of tastes. The biggest part of that business is the buffet restaurants, which is operating under our own brand. We also have various a la carte restaurants on board our ships, as well as fine dining restaurants. And in addition to that, we also have quick service restaurants, and we offer on board our vessels Starbucks. We proudly serve concept coffee, and we are operating Burger King restaurants on board our shuttle vessels. Now, to very briefly mention about the financial details, as mentioned before, prior to pandemic, the revenues were nearly 1 billion euros, but have been halved since the pandemic. EBITDA was 171 million euros, or 18% margin. In the pandemic years, just to understand the margins, EBITDA margins have been positive, but the results have been supported by various government assistance programs, which are represented on the line other operating income. We used to make about 50 million euros net profit annually. Unfortunately, in the current times, the results have been negative so far. And part of the reason why the results have been negative is a tremendous impact on the revenues by pandemic, and also the fact that in our business model, a fairly large portion of the expenses are of fixed nature, and only the cost of goods is of variable nature. So the fixed costs are marked on the pie chart within the red line. And in addition to the cost of goods, the key cost items for us are the staff cost and also the fuel costs. So in 2020, the way to tackle the fixed cost side has been temporary suspension of the operations, and temporary and permanent layoff of staff, depending on the country where the staff have been employed. And to give a general understanding of the dynamics of the season, normally it's a fairly seasonal business, also affected by the fact that it's a volume business due to the large portion of fixed costs. So in prior to the pandemic years, the Q3, which is July, August, September, has been the key period in terms of earning. It is the main period of holidays, and this is providing the largest portion of contribution to the annual earnings. Q1, generally the lowest demand period, which is also the time when we use for the dockings of our ships, which means that more ships are out of operations during the first quarter. In the pandemic years, there were 6 loss-making quarters in a row, with Q3 in 2021 being the first quarter ending on a positive side. Very briefly about the financial position of the company. So most of the assets are the vessels which are in our books, and it's financed largely bank loans, secured bank loans, and the interest-bearing liabilities balanced together with right of use liabilities amounted to 800 million euros in the end of September 21. In general, the net debt EBITDA ratio is one of the key ratios we follow, but due to the COVID years, in recent times, the ratio has been not telling much. The equity asset ratio generally has been geared slightly toward equity being above 50% in recent years, and due to the increase in debt financing, the ratio is, as of late, 43%. And also the cash flows have been strongly impacted by the pandemic. We used to make 114 million or more than 100 million euros in free cash flow prior to the pandemic. The capital expenditure, which consists mostly generally investments both in the technical maintenance of the vessels, but also improving the passenger areas and also some IT investments. In 2020, the 100 million euros is mostly due to previously agreed investment into a new building, a new vessel. And in the last 12 months, the investments have been significantly cut down, and these amounted to 28 million euros in the last 12 months. Overall, we used to generate quite healthy cash flows, which also allowed to distribute dividends and make other share capital reduction payments. In the recent years, the focus has been on saving the costs and managing the costs and increasing the liquidity through debt financing. So there have not been any dividend distributions in the last years. As mentioned about a new ship being currently built, so a new shuttle vessel running on LNG was ordered from Rauma shipyard already prior to the pandemic. The cost of the vessel is 247 million euros, of which 30% has already been paid during the construction, most of which was in 2020. And 70% will be paid the delivery, which is expected in spring 2022. And for the purpose of financing the 70% payment on delivery, in 2019, a 198 million euro loan agreement was signed with a German KfW IPEX bank. The vessel itself will be similar to Megastar, which is currently operating on the route and is also running on LNG fuel. Very briefly about the shareholder structure. 40% of the company is owned by a strategic shareholder, Infortar. And the second largest shareholder is through different holdings, Baltic Cruises. It's represented both on Baltic Cruises Holding with 11% and Baltic Cruises Investment with 6%. And as we are listed both in Nasdaq Tallinn and Nasdaq Helsinki, the total number of shareholders was nearly 35,000 at the end of September in 21. The government bodies of the company are the supervisory board, who are representatives of the shareholders. Most of the supervisory board members are also owners of Infortar. And the management board consists of 5 members, with Mr. Paavo Nõgene being the chairman of the management board since May of 2018. And lastly, about the outlook, obviously the COVID situation has had a negative impact and quite an extensive impact on our business. And also it continues to be the main driver of the results going forward. But in the opinion of the company and the management, We expect the traffic to recover after the situation with the virus improves and the restrictions also remain lifted. We look to go back to our previous route structure from April 2022, with the exception of Romantica, one vessel which used to run on Riga-Stockholm route, which has been chartered out. And give an overview of how the monthly passenger statistics have changed during the months of the pandemic relative to the pre-COVID-19 times, then we can see that as of late in the end of 21, in the autumn months of October and November, the passenger volumes came back quite well following the easing of the quite high restriction imposed by Finland throughout the first half of 21. So this gives quite good confidence for us looking forward in the spring and summer 2022. When we expect the restrictions to be off and the virus situation to be improved quite well. And very lastly, I would just leave here for a couple of seconds some appendix slides on the fleet of the vessels and our routes. If you are interested, you can pause the video and take a look on the slides, as well as a breakthrough of a typical cruise ferry and all its facilities, from the car deck to the buffet restaurant and nightclub on board the vessel. If you're interested, you can contact us on the email investor@tallink.ee, or you can visit our investor relations website, where you can find the reports and presentations on the company. Thank you very much.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.